Good morning. Looking at the US markets, we saw the markets finishing mixed. A little bit of weakness coming in to the broader S&P 500, but still finishing 2 points higher. The Dow under pressure, down by around 14 points at the end of trade. But the Nasdaq was a real standout, up by 31 points as we saw the technology sector continuing to rally higher. There were some positive signs. We had the second day of the Apple World Developers Conference helping its share price higher. Also good money going into Netflix yet again. And we also saw Twitter, its first inclusion to the S&P 500, helping its share price move higher, up around 5%. On the flip side, we did see that Starbucks came under pressure as their executive chairman, Howard Schultz, decided that he would step down. Now, this news came through late yesterday. We did see it falling in after-hours trade yesterday and continuing to lose ground, down around 2% by the end of trade. Also overnight, there was a little bit of weakness coming into the banking sector, but we saw that starting in Europe. Still concerns about some of the stability of those large European banks flowing into weakness in the US, and also trade concerns raising their ugly head yet again. Still no firm announcement on what's going to happen with US and also Chinese trade conditions or tariffs in the future. So we did see the industrial sector was a little bit mixed. We saw the retailers doing well, with Macy's one of the better performers, up around 7% at the end of trade, and Coles, and also some of those smaller discount retailers doing well by the end of trade, just on the back of firmer retail sales and also the job numbers that came out late Friday in the States. Now, if we have a look at other news, we did see that the manufacturing index in the US continued to move higher. The ISM index increasing now for 100 consecutive months, coming in at 58.6 for the month of May. And taking a look at the commodity markets, well, we have seen a little bit of a turnaround. The gold price slightly higher at $1,301 US an ounce, and that oil price ticking a little bit stronger to 65.35 US a barrel, pushing aside some of the commentary that's come through on the wires saying that the US would like to see OPEC and non-OPEC nations coming out and lifting their capacity to help control prices. Now, if we have a look at the Aussie market at the moment, we are set for around a 16-point gain at the start of trade. It is going to be a big day for the Australian market because we get the GDP. This is the quarterly growth read for Australia for 2018. We're expecting to see growth of around 1% for the quarter, really boosted by the fact that we know government spending was stronger. We also know that we've seen a fair bit of money coming back into the company results, with company profits increasing. So you're expecting a bit of bang for your buck coming back into the government coffers off the back of that. And we're also expecting to see that exports were a lot stronger. And we're looking for annual growth of around 2.9%. Lastly, let's have a look at the Aussie dollar ahead of that important read. A little bit subdued in the overnight session, now at 76.12 US cents.